So it is no secret it's been a rough few years for potential home buyers. Stubbornly high rates, low inventory continues to be an issue for many areas across the country. But we're seeing some signals that the stock market is finally easing. The latest Freddie Mac data found that the average rate on a 30-year fixed rate mortgage did tick up to 6.3% on Thursday. Purchase applications are 20% higher than they were a year ago. And my next guest says that's not a surprise. She's seeing some definite green shoots in the housing market, including a reset underway in buyer behavior. Joining me now is Jenna Stauffer, broker and analyst for Sotheby's International Realty. It's great to have you here on set.
Great to be here. Thank you for having me, Cheryl.
So you're calling it a bifurcated market, and you say that buyer behavior is changing.
It is such a bifurcated market. So it's bifurcated in terms of location. It's bifurcated in terms of the consumer. Now, to answer your question about buyer behavior changing, it's really changed. You're seeing buyers, they no longer have this FOMO. They're really entering the market with a lot of caution. They're being selective. But now you're really seeing what I call the comeback buyer. And these were buyers that were waiting for perfect conditions. And they're seeing that these perfect conditions, Cheryl, they don't exist, and life has happened. They're also really negotiating the market as opposed to chasing the market. And you're finally starting to see some sellers that are meeting them there. And I would say that this is such a huge change that we've seen in terms of the housing market.
So it comes down to the negotiation process, and that's where we're seeing kind of the movement, because we have seen the market loosening up. I mean, this is the spring selling season right now. I think that's important. But you say that they're no longer chasing.
Correct.
The market. That's key, I think.
It is key. And again, to have these sellers really meet the buyers in the middle. And then I mentioned too that the consumer is very bifurcated. So on the high end, the luxury segment, this is where you see real strength. And then of course you do see strain more on the bottom end of the housing market. It's really interesting too how money has just been moving, Cheryl. It's been moving from financial assets into real assets like real estate. And because there's been such strong wealth creation, of course, from the stock market, from AI, from technology, money doesn't sit, it really moves. And that's why the luxury market has been on fire. You're seeing these baby boomers that want something tangible. They want to enjoy their wealth, and they're going after these trophy properties, and they're just really setting a new ceiling in the housing market.
That is so interesting that you say that. You also say, this was kind of news to me, you're saying Texas and Florida are no longer the easy seller wins that they once were. So what's going on in those two markets?
So during the pandemic, you just saw prices go crazy in Florida, in Texas, and sellers were able, I mean, properties were going up 60, 70% in some markets. And it's been a tough pill for some of these sellers to really swallow because the prices have softened. There's been so much more inventory now that's come to the market in Texas, in Florida. So there's really been a softening. There's been a correction in these states. So it's really flipped more in favor to buyers. And you're really seeing that buyers are seeking out some opportunities in these states because they're seeing that prices have come down some, that sellers are willing to negotiate, and they're taking their chance. They're going after it.
That's really interesting you say that also because we've seen so many major corporations, you leave New York, they leave New Jersey, they leave California, and the two states that they are opening up shop, Texas and Florida were the main kind of destinations. With those companies comes employees that need housing, which I think is interesting. I want to talk about Kevin Warsh. Next week, the full Senate's going to vote on his nomination to be the next Fed chair. He's expected to go through. So we've now got a new era for the Federal Reserve. Interest rate policy, you know, the expectation is there's a lot of dissent in the Fed. There was 4 dissenters on this last decision this week. So where do you see that going?
Well, I would say that he, you know, if everything goes through, he definitely has an ambitious agenda. And I think it's good to just get new momentum at the Fed. I will say that buyers, though, they're starting to digest that rates are probably going to stay around this level for a while. I do believe eventually we will start getting rate cuts, and these rate cuts and just lower rates rates in general would be so important for these first-time, these on-the-margin buyers, because the National Association of Home Builders, Cheryl, it says that when you just go from a 6% mortgage rate to a 6.25% mortgage rate, that can price around 1.4 million households out from being able to qualify for a medium, newly priced home.
Wow.
So the rates really matter for the on-the-margin buyers.
Even on that small percentage, it's interesting because I was reading Minneapolis Fed President Neil Kashkari wrote Why I Dissented. And he basically said, I didn't want to put any telegraph out there to the market about interest rates, whether we cut, whether we hike. So he had a big disagreement with the language in the statement. And that matters. I know that the real estate market in general, the banks all watch that. Jenna, it's great to have you on set again.
Great to be here. Thank you so much,
All right.
Cheryl.